You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 3rd day of September, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First broadcast is our live training room. That's from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is private. It's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com, and at the very top of the page it says 5-day free trial, no credit card required. Just click the purple button, fill out the registration form completely and honestly, please. Hit submit. And we will get your desktop set up, get your indicators indicating today, and then your trial will officially begin tomorrow. Don't worry about the fact that tomorrow is Wednesday, because you get 5 consecutive trading days, even if it stretches over a weekend. So, in effect, you get a couple extra days. The weekend doesn't count against you, but you'll still have access to the indicators, and there are markets that trade over the weekend and around the clock. So, when the live training room ends each day, we take a 30-minute break, come back for this broadcast, the afternoon broadcast. There's a couple different ways. Now, this broadcast, unlike the first broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, I'll give it to you first. You only have to do it once. Go to mytradingiq.com. This time, scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen is every trading day going forward, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now, the benefit of that is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, but you'd still like to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. For both of those, just use our YouTube channel. It's easy to remember, youtube.com/CFRN. You already got the YouTube part down, so really you just have to remember the CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, year. You get the idea. You'll literally see how we've evolved over the years to the simplicity that our strategy and indicators now offer. So if it's been a while since you dropped in and took a look, shoot us an email, support@cfrn.net, or call us at 949-42-EMINI, and we'll arrange a special showing just for you. youtube.com/CFRN. This is our daily schedule for the afternoon broadcast. We'll open with our daily devotional, word of prayer, get into some news, both global and markets, recap of the Logic 247 alerts, the concierge trade alerts. About 50 minutes into the broadcast, Michael will join us and give us a recap of everything that happened in the live training room this morning. Then we'll go live on the TradingView platform for a half hour, do some live trading. Then I'll come back and wrap things up with our good word for the day. So, the topic of our devotion last week, this week, and even next week: God's dream for your life. Today's scripture is Ephesians 2, verses 7 through 10. I'm going to share it with you from the Message translation. Now God has us where He wants us, with all the time in this world and the next, to shower grace and kindness upon us in Christ Jesus. Saving is all His idea and all His work. All we do is trust Him enough to let Him do it. If God's gift from start to finish, we don't play the major role. If we did, we'd probably go around bragging that we'd done the whole thing. No, we neither make or save ourselves. God does both the making and the saving. He creates each of us by Christ Jesus to join Him in the work He does. The good work He has gotten ready for us to do. Work we had better be doing. Hence our topic of the devotion, God's dream for your life. Today, let's talk about don't waste your shape. If you want to know God's will for your life, you've got to look at what you're good at. Why would God give you certain gifts, abilities, and talents and not expect you to use them? That would be a waste. God gives you spiritual gifts, heart, passions, abilities, a personality, and experiences. Hence the acronym SHAPE. Don't waste your shape. Now that you know the acronym, I'll give it to you again. Spiritual gifts, heart, abilities, personality, and experiences that make you unique. And when you take time to figure out how God has shaped you, it gives you direction for where you should go with your life. Ask yourself, what am I good at? What do I love to do? What is my passion? What turns me on and what turns me off? What is it that people affirm in me? How can God use those abilities for His kingdom? Ephesians 2:10 says, "For we are God's handiwork, created in Christ Jesus to do good works, which God prepared in advance for us to do." The word for God's handiwork in Greek is the word poema, from which we get the word poem. You are God's poem. You are a work of art. You are unique. There is nobody like you. But there's more to life than being unique. God wants you to be unique and effective. He designed you the way He did so He could do good works. Even before you were born, God pre-designed a role for you in life. He said, I'm going to make this person and give him or her certain gifts, abilities, and talents, and I'm going to allow them to go through certain experiences. Some good, some painful, and some educational. I'm going to bring all these things together because I want something done in the world that will take that kind of person to do it. One day you'll stand before God and He'll ask, what did you do with what I gave you? If you don't use your experiences and your shape for what God intended, well, you missed the point. We are saved to serve. It's called having a ministry, using your talents and gifts to help other people. We're all called to ministry. Not all of us will stand in a pulpit and preach a sermon, but wherever you are in life, as a follower of Christ, part of understanding God's purpose for your life is so that you can be actively engaged in building God's kingdom right here on earth. Fulfillment means being who and what God meant for you to be. In 1 Peter 4:10, the Bible says God has given each of you some special abilities. Be sure to use them to help each other. Join me in a word of prayer. Heavenly Father, we come before you with grateful hearts, acknowledging your abundant grace and love that you have shown us through Christ Jesus. We thank you for the incredible gift of salvation, not earned by our works, but given freely by your grace. Lord, help us to walk in the good works you have prepared for us, living as your workmanship, created in Christ to reflect your glory. Guide us to live lives that honor you. And may we always remember that we are your children, called to share your love with the world. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. And happy Tuesday. Hope you had a great Labor Day weekend. Maybe you got to go out and do something special, take a little road trip, throw something on the Barbie. That's as in barbecue. Let me give you the numbers from around the world. We'll start here in the U.S., where there is what's called blood in the streets. Yeah, it's a brutal day. But last night, the chart I posted in the discussion group foreshadowed what would potentially happen. I didn't think it would all happen by this time today, but it did. So anyway, starting in the U.S., the Dow is down 400, and these are the cash markets, down 444 points, a little over 1%. The Nasdaq's down 410 points, almost 2.5%. S&P 500 down 77 points, almost 1.5%. And then the Russell 2000 down 49 points, 2.25%. In the commodity basket, crude oil down $2.75, trading 70.80 last. That's a drop of 3.75%. Wow. Gold down $9.60, trading 25.18 last. Silver down 84 cents, trading 28.30 last. That's a drop of almost 3%. And got to remind you that when silver moves a dollar in either direction, that's worth $5,000 per contract traded. And currently we're down 83 cents on the session. In the Asian markets at the close, the Nikkei dropped 14 points, Shanghai fell 8, the Hang Seng dropped 40. And in the European markets at the close, FTSE down 65, the DAX down 183, just shy of 1%. The CAC down 71, again, just shy of 1%. So basically, we got a global sell-off. It was a red day for Asia. It was a red day for the UK. And it's a big red radio Tuesday here in the US of A. Wow. But again, we had a pretty good idea it was coming. And when we go to the charts, you'll see it. And you'll go, hey, why didn't I see that? Well, you should have if you were tuned in last week. If you tune in each day. All right, let me share a couple of market news articles. Oh, wait, there was something over here I wanted to share with you. What was it? Unrest over hostages. Hundreds of thousands of people rallied across cities in Israel for the second day yesterday after Israel's military, over the weekend, recovered the bodies of 6 hostages held by Hamas. Demonstrators protested in Tel Aviv, Jerusalem, and other cities, alongside a separate hours-long nationwide strike from Israel's labor union. Protesters want Prime Minister Benjamin Netanyahu to accept a hostage release deal immediately. Israel forces found the 6 bodies, including that of a 23-year-old Israeli-American citizen, in an underground tunnel in Gaza's southern town of Rafah. The hostages ranged from 23 to 40 years old, with 4 in their 20s, and were believed to have been shot at close range between 48 and 72 hours before being found. The news came less than a week after one hostage was rescued from the underground tunnel network. Roughly 100 hostages remain in Gaza, while at least 40 are believed to have died in the 11-month war. It's been going on for 11 months. Brazil blocks X. A 5-member panel of Brazil's Supreme Court yesterday upheld a ban on social media platform X nationwide. The unanimous vote came from the court's Justice Alexandra de Moraes ordered the ban Friday over X's failure to name a local legal representative as required by law. The decision came amid a months-long dispute between the justice and the social media platform. Elon Musk-owned X will remain blocked in the largest South American country until it complies and pays more than $3 million in outstanding fines. Brazil is the world's 6th largest market for X, roughly 21 million users. The US has 108 million users. X was shut down over the weekend following the ruling by de Moraes, who called on the court to review his decision. 5-member panels of Brazil's full bench of 11 Supreme Court justices can review any decision made by a single judge. If you're trying to lose weight, I'm sure you've seen the Wegovy or the Ozempic TV commercials. One of the largest studies on the effect of a new class of weight loss drugs on mortality found regular use of semaglutides reduces the risk of death from all causes by almost 20% for patients who are overweight or obese. Wow, I wonder what happens if you take it and you're not overweight or obese. 20%, that's pretty substantial. Results are the latest to suggest the drugs may have wide-ranging health benefits beyond their traditional use in treating diabetes. Semaglutides, like the ones you see on TV, Wegovy and Ozempic, basically they're the same drug, act by mimicking a naturally produced hormone known as GLP-1. The molecule is produced in the gut and prompts the body to produce insulin while dampening cravings for food. The study administered the drug once a week to patients aged 45 and older. Compared to a placebo group, the recipients showed a 15% drop in cardiovascular death and a 23% drop in COVID-19 related deaths. Roughly 40% of U.S. adults are considered clinically obese, which we all know is a major risk factor for heart disease. But when you watch the commercial, before you rush out to your telehealth doctor, you can get a lot of prescriptions these days just through telehealth without having to go into the doctor's office. But make sure you watch that commercial all the way to the end. where they talk about your ear could fall off and, all the other things that could happen. So, but it's out there, it's on the market. All right, now to the markets. U.S. stocks fell today to kick off a historically tough month for markets, as AI darling Nvidia and chip stocks led tech stocks down. Meanwhile, attention turned to a week of data on the economy and labor market, highlighted by a crucial monthly jobs report. And of course, we have the Fed coming up mid-month. I think it's on the 18th. Early trading on Tuesday did not exactly provide a rosy outlook. Nvidia fell more than 7% today, as investors continued to withdraw following a lackluster earnings report and lingering questions about the future of the AI trade. Other chip stocks fell in tandem, with Broadcom, Qualcomm, and Taiwan Semiconductor Manufacturing Company all down more than 5%. Also top of mind is the August jobs report due out on Friday, which could influence how deeply the Federal Reserve cuts interest rates at its meeting this month. With inflation now cooling, policymakers are on alert for the labor market to fall into place. For investors, the focus is on whether the signs of slowing in the July jobs report were overstated, or an early warning of a broader slowdown. Any hints of stress should put pressure on the Fed to make a bigger reduction in rates. As of today, traders were pricing in 31% odds of a 50 basis point cut instead of the 25 basis points per the CME FedWatch tool. A measure of U.S. manufacturing ticked up last month, according to fresh figures from the Institute for Supply Management, the ISM, but the metric reflected slowed factory activity, with a reading below a threshold that suggests a contraction in the manufacturing sector. Well, we kind of knew that was coming too. Boeing still can't catch a break. Boeing's annual free cash flow target of $10 billion may be delayed by about 2 years, 2027, 2028, and it would have to raise $30 billion before developing a new aircraft, according to Wells Fargo, who downgraded Boeing today. Shares of the Dow component fell more than 8% to a near 2-year low on Tuesday, after lead analyst Matthew Akers pushed Boeing to underweight and cut the price target to $119, a 32% downside to the last closing price. Now, here's some Intel news. Remember Intel? Yeah. Intel was one of the first 2 tech companies to join the Dow Jones Industrial Average during the late 90s dot-com boom, along with Microsoft. Now, a slump in Intel's share price could cost the American chipmaker its place in the blue chip index. The Dow has 30 stocks, 30 companies. Okay? They are large cap companies, of course, and they're called the blue chips. The theory is you can just, put your money in those guys and never have to worry about a thing. As you've heard me talk about many times on this broadcast, the indices will always go higher over time. Yes, there'll be sell-offs like there is today and blood in the streets and all of that, but over time, the indices will always go higher, because when a company like Intel slumps enough, they get shown the exit, and a brand new, fresh, bullish, strong company is brought in to replace them. Because there's always got to be 30 stocks, 30 companies, just like the S&P 500, there's always 500 companies. So you rotate out the bad, rotate in the good, and guess what? Over time, the indices always go higher. Analysts and investors said Intel was likely to be removed from the Dow, pointing to a near 60% decline in the company's shares this year. That has made it the worst performer on the index and left it with the lowest stock price on the price-weighted Dow. A removal will hurt Intel's already bruised reputation. The company has missed out on the artificial intelligence boom after passing on an OpenAI investment, and losses are mounting at the contract manufacturing unit that the chipmaker has been building out in hopes of challenging Taiwan Semiconductor Manufacturing Limited, which is down 4% on the day itself. So if it can happen to Intel, it can happen to Boeing, whichever index it's in. All right, what else we got? Construction spending fell more than expected in July, as higher mortgages and increased supply weighed on single-family home building. Commerce Department's Census Bureau said today that construction spending dropped 0.3% after being unchanged in June. Economists polled by Reuters had forecast construction spending dipping only 0.1%. Construction spending increased 6.7% year on year in July. Spending on private construction projects decreased by 0.4% in July. Investment in retail or in residential construction also fell 0.4%. This is big news, and the market's apparently not happy about it. Apple down $5. Okay, it's only 2%. Only 2%. Apple will use organic light emitting diode, that's OLED. Some of you may have an OLED TV already, but Apple is switching to OLED displays for iPhone models, all iPhone models sold in 2025 and later, moving entirely away from liquid crystal displays. Currently, your iPhone has an LCD display. This all came from Japan's Nikkei newspaper, which was citing unnamed sources. Television and smartphone makers are adopting OLED displays over LCDs for the former's ability to deliver more vivid colors and sharper contrast, ideal for high-definition videos. Wow. I guess the manufacturers of LCD displays, that might be a good short. Now, a record was made today. A record number of blue chip firms are swarming the U.S. corporate bond market, taking advantage of cheaper borrowing costs as they look to issue debt ahead of the U.S. presidential election. Ford Motor Credit and Fifth Third Bancorp are among 29 companies tapping the bond market, the busiest single sales day for the market on record ever, according to Bloomberg. Corporations are expected to borrow about $125 billion of U.S. high-grade bonds in September. The issuance deluge comes as corporate finance chiefs aim to lock in debt while risk premiums are low. The The average spread on U.S. high-grade firms traded at 93 basis points Friday, the lowest since July 31st. Average all-in yields have fallen below 5%, making borrowing more attractive. The post-Labor Day Tuesday last year was the investment grade market's busiest session of 2023, with $36.2 billion of debt priced by 20 firms. Summer is officially over and companies are looking to borrow now while the market is open. Companies don't want to take the chance of having any volatility around the upcoming elections. U.S. manufacturing activity contracts for a fifth straight month. We already covered that. And for bond traders, here's a bit of a warning from Bloomberg. Bond prices are rallying on expectations the Fed will soon start cutting interest rates at a recession-fighting pace, creating a risk that traders are again underestimating the strength of the U.S. economy. The gains extended on Tuesday, slashing the yield on two-year treasuries to around 3.85% from more than 5% in late April. The advance over the last 4 months marked the longest winning streak since 2021. The move has been driven by anticipation that the central bank will reduce its benchmark rate by more than 2 full percentage points over the next 12 months, which would be the steepest drop outside of an economic downturn since the 1980s. For bond bulls, that's created a risk that the labor market, which cooled sharply in July, will show resilience, allowing the Fed to move at a more moderate pace. First major test comes on Friday when the government releases August payroll data that economists expect to show a rebound in job growth and a drop in the unemployment rate. Now, Columbia Threadneedle Investment says if you miss the big rally, it's going to be a little bit dangerous to chase it right now. We all know you should never chase a trade. We're playing with the probability of the job market stabilizing here or deteriorating fast. Okay. Price is either going to go up or it's going to go down. I gotcha. Or how did John used to say it? We're definitely moving higher from here unless we start to break down. That's it. Miss you, John. Some of you have been around long enough to remember John. He was my co-host for quite a few years. He got sick with the COVID, then he got the long COVID, and then no more John. We miss you, buddy. All right, Logic 247. That's our 24/7 around-the-clock Emini alert service. We're currently in week 318. Over the last 318 weeks, we have issued over 17,700 individual handcrafted alerts. Since the markets opened last night at 6 p.m. Eastern, we issued a total of 13 alerts. Still waiting on the outcome of 5. We had 8 actionable alerts, of which 1, or 13%, would have been stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Last week, I think we finished the week out with 26%, so we were a little above the average. But when you put that up against 318 weeks, it doesn't really move the needle much to have 1 week closing above 20%. I think we might have had 2 weeks this year closed above 20%. And I think they've been in the last couple months. Anyway, one was last week. So nice to see 13% today. Again, Still waiting on 5. Now, all alerts that are issued on what's typically a Sunday night, but because of the holiday, it was a Monday night, those are based on the last week's weekly trading zones. Because the new weekly trading zones, which typically come out Monday morning at 6:15 a.m. Eastern, when there's a Monday holiday, they come out Tuesday morning at 6:15 a.m. Eastern. So, again, over the last 318 weeks, we've issued over 17,700 individual handcrafted Logic 247 alerts, and we've averaged 20% or less of the alerts on a weekly basis being stopped out. Again, just based on market structure. And that simple process we teach all of our passport holders. Now, the Logic alerts have an entry price, an initial target, additional targets, and then a final trade to target. But the purpose of the alerts is not for you to just trade them so you don't have to learn how to trade. The purpose of the Logic alerts is to help you learn how to read a chart. If you're a new trader, when you look at a chart, it looks like chaos. And nobody knows what's going to happen next in the market. But once you learn how to read a chart, and once you understand how price flows, and you can read our very simple indicators, then you can know with a great deal of certainty what the next high probability move is. Not so much on the smaller range charts, but on the larger, like the 30-minute, the daily, and the weekly, and the monthly, that kind of thing. So please use the Logic alerts as they're intended to help you learn to read the chart, because until you can actually read the chart, it's very difficult for you to learn how to trade. Now, 318 weeks is a lot of weeks, but long before we had Logic 247, we had the concierge trade alerts. Now they're a good way to help you determine if you figured out how to read the charts using Logic 247. Normally, the alerts come out. The CTAs are published. The Logic alerts can come out around the clock anytime, 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. But the CTAs are published as a static report, usually right after the Globex open. But yesterday was a holiday, so it was 8:20 p.m. Eastern when these were published last night. So every one of our members and trial members had every one of these targets at 8:20 p.m. Eastern. If you're a member or a trial member, you can read this information here. It explains everything you need to know. Or you can go watch a previous episode of this broadcast, where I usually go into great detail explaining it, but really it should be for members and it should be for trial members. So if you haven't taken the trial, go to mytradingiq.com and take that trial. All right, here's the deal. Red and falling has come into the picture. Now, let me see if I can show you what it looked like last night. I can. Okay. Red and falling has officially entered the picture. Price is currently sitting on the 50% fib extension as support as of 11 p.m. Eastern. This is what the market looked like last night at 11 p.m. Eastern. Red and falling. That little red candle there. Oh, I went the wrong way. Maybe I didn't. Next potential major support at the daily step line, then the 38% fib extension, followed by the low of August 30th, and then the daily BBC. Yep. So remember, it looked like that at 11 p.m. Eastern last night, and it now looks like that. Every one of those potential areas of support that I outlined, the step line, 38% fib extension, the low here of August 30th, right through it like a hot knife through butter. But the market has found support now since basically the open, Wall Street open. At the daily BBC, there was a little bit of a bounce, and that little bounce has gone away. And it's looking as if we might trade through it. Now, the pullback to the BBC holds more often than it doesn't. Green lines of BBC stands for bull, bear, cross. Price crosses below it, we're bearish. Expect lower prices. Above it, bullish, expecting higher prices. And as you can see, the pullback, whether it comes from below or above, holds more often than not. But eventually, it will trade through, as it did here, as it did back here on May 3rd, and as it did here, July 19th. But then the retracement, once we traded through it, then the pullback held. So we got a leg, some sideways consolidation for about 5 sessions. Then the pullback held. Then we put in this most recent low. This lines up with these lows here from back in April. And then we had an incredible buying rally till we got here. Look at how many days we were stuck in this range. We did pop out. This is Tuesday. This is Monday. Of course, we weren't here yesterday. Here's Friday. Here's Thursday. So on Thursday, we came down to the 24% fib retracement. And we didn't quite touch the BBC, but it's a daily chart. Close enough. What did it do? Gave us a bounce. The pullback held. Now, at the time of the pullback, we had blue and climbing, but it was directly over price. That's the indication that it's on its way to turning into red and falling. Okay. So how we close today will be really important. Do we take out the 24% fib retracement? If so, and this is the lowest fib extension, and this is the 38% fib extension. So we know where resistance is overhead, know where support is below. Here, here, and right here, this bullish cross took place basically at the lowest fib extension. Okay, this low to this high to this low. God, it seems like forever since we drew those. But yet, look at all these sessions where we could not break above that 50% fib extension. So there was a last gasp attempt yesterday when the American markets were closed. And then today, that's a big move down. The high, what do we have? 69, 56.69. The low, 55.69. Okay, I guess that's a 100-point candle right there. Wow. Big day. Now, why a daily chart? I encourage you, whatever you trade, whether it's futures or stocks or crypto or Forex or ETFs, just spend 2 minutes with the daily chart of whatever it is you trade. Why? Because the institutional traders who actually move price because of their account size and the size that they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, has everything to do with account size. So what you're doing is you're kind of peering over the shoulder of the traders who move price. And in doing so, all you have to do is what they're doing. long enough to get your goal for the day. Our strategy and our indicators are not designed to outsmart the institutions with their infinite resources, but to help you see and understand exactly what the institutional traders are doing. Trust me, every institutional trader out there that trades the S&P 500, they've got this daily chart up. Now, while they may not have our indicator set, they all understand what a 24% fib retracement is. And remember, we caught a really nice bounce. Looks like about a little more than a 100-point bounce last time we pulled, and that's the shallowest possible fib retracement. A deeper retracement would take us down to the 38, to the 50. We've already been to the 62. Came roaring back. It looked like we might take out the all-time historic high, but we didn't. Okay, all alerts, logic, and concierge are created on the 30-minute chart. Now, these are last week's zones because the alerts that went out last night were based on last week's zones because the new zones didn't come out until this morning at 6:15 a.m. Eastern. Normally it's Monday morning at 6:15. When Monday's a holiday, they come out Tuesday morning. So here was the open last night, but as you know, as I said, we did not get the CTAs out until about 8:20. So that would be in the life of this candle here. Okay, these are 30-minute candles. So price came down to the BBC. It bounced up into red and falling resistance that took us below the BBC. And this low right here lines up real well right there. Okay. Now again, this abbreviated session was Monday. Back over here is Friday. The price drops to a weekly zone. We expect support. When it rallies up to a zone, we expect resistance until proven otherwise. So from this support, whenever the market finds support, it's going to go look for resistance, which it found at the BBC, but then it also found support at blue and climbing. See how red and falling turned to blue and climbing? Now the official name of that indicator is the CFMA1, but I just refer to it as blue and climbing, red and falling. One's bullish, the other bearish. So we got a doji right at the long target. Okay. And that was the first 30 minutes of trading after the London Open. London sent us down below the BBC, right to the short target. And then for 30 minutes, we straddled this weekly trading zone. Then we continued to drop to the next zone and continued to drop to the next zone, 75/76. Now, in tomorrow's broadcast, you'll see this week's zones on my chart. Any alerts that go out today will be based on this week's zones, because all of our members and even trial members have the new zones. Okay. So even though it's been a week and a day since these zones were published, this is what we expect when price hits a zone support. Okay. We'll pick up with the Dow, which is also currently sitting on support right on top of last week's zone. But Michael's here, so he's going to give us a recap of what happened in the live training room this morning. And we'll do some live trading on TradingView for 30 minutes. And I'll come back, I'll finish that recap, and we'll wrap up with our good word for the day. Michael, looks good.
Excellent. Here we go. Here we go. All right. Good afternoon, everyone. Today is Tuesday, the 3rd day of September. Wow. It's hard for me to even say those words. 3rd day of September, 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. When you click on that, there is no credit card required for your trial. Whoops, didn't we do that? When you click on that, there's no credit card required for your trial. You click on that, it's going to bring you to this registration page where all that we ask for is your name, your email, your phone number. There's 5 multiple choice questions down here at the bottom. You can give us your machine ID if you have NinjaTrader. Give us your TradingView login ID if you have TradingView. Okay. If you don't have TradingView, you should really get it. You can get the free version if you want to, but you really need to get TradingView so that you can have access to this guy down here at the bottom. It is only on TradingView. The ribbon is on all 3 platforms, but this guy down here at the bottom is only on TradingView. Okay, so I would recommend going out here to the platforms and following the instructions right here to get TradingView. They have a bunch of different versions. Well, they do have a bunch. 3 of them are highlighted. They have a free version that's free to everyone, free forever. And that will give you 1 indicator. It won't give you any alerts, but it'll give you one. I think it'll give you up to 2 indicators. It won't give you any alerts, but 2 indicators is all you really need, because that's all we have on these charts right here. Well, I have 3, but you really only need 1 of these and 1 of these. All right. So go out and get TradingView if you don't have charts, or even if you do have charts, go and get TradingView. Wow, went down a rabbit hole there, didn't I? That's for this right here is where I got off that tangent. As your TradingView login ID, go out to TradingView, get your login ID, and give it to us. It's really a simple process. Okay, if you do get TradingView, you're gonna have to get real-time data from them. That's $7 a month. I won't go into that right now, but you need to do that too. All right, so recaps. Now we started a new month and we ended the 24/20 blueprint last Friday, Friday. We ended the 24/20 blueprint. We had a great month. We had our best month yet, ever, which we should have because we're at the most contracts ever. And we had a great final day of the month. It wasn't our best day of the month, but it was pretty close, and it was pretty close to our best day of the year too. It was a great ending to the 24/20 blueprint. So this month, we just started up with the 24/20. We continued with the 24/20 blueprint starting from this year. All right, we're in the 9th month. So we're in 9 contracts right now. I went down to 9 contracts from 20, I went down to 9. We still had a great day. This morning we still were up $1,392 with 1 contract, right? With 1 contract, we're up $1,392. So with 9 contracts, we're up $12,532 this morning. Still a fantastic day. And we'll get into everything that made that happen in just a few minutes. But you can see on the NQ, we're up to, did I say, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I got to say that every time I show this thing. Anyway, on the NQ, we're up $210, 210 ticks. 210 ticks with 1 contract. On the Russell, we're up 14. On the YM, we're up 12. On the ES, we're up 17. Okay, that is with 1 contract. It took 6 minutes and 2 trades this morning to get to the goal for the day. At that point, we're up $2,160, and we took a total of 20 trades this morning. So we had a busy morning with trading. And again, that's starting at 9:27. Number of trades, a number of minutes. Keeping that under 15 minutes and keeping it under 5 trades seems to be a regular thing now. On the month, it's the first day of the month, so we're up $1,392, averaging $1,392. We've now gone 164 days this year. Every day this year, every business day this year that we've traded, we've gotten our goal. And 79 business days since the last time we had a blue day, and 326 business days since the last time we had a red day. We are now at $71,192. $71,192 on the year with 1 contract, averaging $434 per contract per 2-hour trading day. This highlighted area is the finish of the 24/20 blueprint. So all the 20 contract stuff is going to end right there, and the rest of it is going to continue on over here. So saying that, we went to 9 contracts this morning. In the 9th month, 9 contracts, Took 6 minutes and 2 trades to get to the goal for the day. If you were to quit trading when you get the goal for the day and add one contract per month, so far this year you would have averaged $2,055 per hour. $2,055 per hour. That's going to be a great number by the end of the year. Now, at the end of 2023, into 2023. Let's just go see what that number was. It was a pretty good number at the end of 2023. Right here, 2,413 is what it was at the end of 2023. I think we're going to do better than that. Now, I mean, even though we were the first 9 months of the year, actually the first 6 months of the year, 5.5 months of the year, with the multiple contracts, it made it harder to get the goal for the day. But in the middle of June, we discovered if we started at this one specific time, that we were able to get the goal for the day early on, even with a whole bunch of contracts. So by the end of the year, I think if we're able to continue this rate right here, which we have now for 2.5 months, if we're able to continue that rate throughout the year, then this number is going to be great by the end of the year. Yeah, by the end of the year, that number's going to be, it'll be much better than it was last year. Okay, I mean, just from Friday to today, it's gone up $30, right? 55 minus 17. Yeah, $30 just about. Anyway, all good stuff. All right, so let's get into the actual trades. We did trade something on everything, so we'll start out with the YM. Again, the YM is on a 19 range. We didn't have a ton of trades on the YM, did we? No, just a couple. We had the first one right in here on the YM. Picked up 2 ticks on that one, and the next one over here, we picked up 10 ticks on that. It's not to say that there were not any more trades. There were. I just didn't get any of them. Though there were not a bunch. There was one right there that I missed. Actually, the ribbon was pretty crunched up today on the YM, so we didn't get a lot of opportunity on the YM. We only missed one trade on the YM. Not too bad. That was pretty good. I didn't realize we had done that well with the YM as far as getting the trades that were available. All right, on the Russell, we didn't have a ton of trades there either, just a couple. We had, I guess I didn't mark the last one. We had a +4 on that one, and toward the end of the session in here somewhere, right here, we had a +10 on that. So we had a +4 and a +10. I think it was that short right there that we got the +10 on. Pretty sure. And during the break, well, let's see what we missed though with the Russell. Okay, so the ribbon had to be spread and you had to come out of the overbought. So we got the first one right there. We missed this one right here. We missed that one right there. So 2 winning trades we missed. This one was going into the zone, so we couldn't take that. It looks like it probably went enough to get the stop to break even anyway. 85 down to 84.3. No, it didn't go enough to get the stop to break even if we did take it. Because we didn't do that, you know, we had to get a lower swing in place. And then once you get the lower swing in place, you get in here, and there was this one over here that we did do. It looks like right in here, there was one that we could have done. If we had done that in there, it looks like it probably would have stopped us out. 78.2 up to 79.5, maybe not. It might have gone just enough here, kept us in the trade. That might have been the actual trade that I got the, actually I think it was. I think it was a long trade where I got the 10 ticks. I think it was right there that I got the 10 ticks because it did almost stop me out a couple of times. And then there was this one right here. Okay, I guess it definitely was not this one that I got the 10 ticks on because this was during the break. But there was this one right here during the break and this one right here during the break, both successful trades. Okay, you guys see that the actual trade setup is, I did change the stuff out here on the website, on the trade rules page. Remember what it used to look like? This is it now. It's a single line for the longs and a single line for the shorts. That's it. And that is the whole thing that encompasses it all. We used to have about 5 lines for each one. Yeah, huge difference. Huge difference. I actually added this down here also for the 31 range. And I added this for people who take the free version. You can just use this right here. If you have the free version of TradingView, you can click on this. As long as we authorize you, you can click on that, and it has the two indicators that you need right there. It's got this one and this one. Okay, you can do that with the free version of TradingView. The essential is this one, and the 6JU NAIR, that is the one that I'm using right here. Okay, so I did update all that stuff this weekend. We need to put new videos out on the website. I guess I need to create new videos for us to put out on the website, but that will certainly be an easy thing to do. All right, so that was all the Russell stuff. Now we'll go to the ES. On the ES, let's go all the way back here. Here we go on the ES. Now, there were plenty of opportunities in here on the ES that I missed. We took this first one here, we got a break even on that. Then the next one here, we got just a bunch of little trades on the ES. We got one tick on that one. This one here, I have this here, I got a break even on it, but I kind of messed it up. I had a horrible fill and I got out of it before it went 4 ticks into profit because I filled like right down here. I shouldn't have taken that trade, but I got a break even on it. So we got one tick there, break even, break even. Then on this one, we picked up 2 more ticks to get us to 3. Then we picked up 3 ticks there to get us to 6. We had a break even there, a break even there. And we picked up 11 ticks on this one to get us to 17. And that's where we ended on the ES. Now let's go back here and look at what did actually happen. Now, that's what I did do. Now what did actually happen? Okay, like right here, you could see all the ribbon right there. Right there, short. You can't see the ribbon, can't see the ribbon, you can see the ribbon. Right here, we did take that one right here. That needed to put in a lower swing, which didn't do until all the way over here. Then you can see all the ribbon. Right in here, you could see all the ribbon. I did take that one. Over here now, you really got to spread it out to see the ribbon in here. Okay. Really got to spread it out to be able to see all the ribbon. Now in here where the ribbon started to change color, you see how it changed to red right in there? I didn't take this trade because of that. It did turn back to blue, so I didn't take anything through there, but it looks like there was a couple of opportunities in that you could have where it turned back to blue. That being one, that being one. And right here, it turned back to blue and you see all 4 lines. So a few of them right through there. In here, I didn't grab this one right here. You know what? I guess that didn't pull out of the over bar on that bar. Interesting. So that wasn't a trade. Okay. This one over here was, nope, I guess the room was kind of crunched up there. So nothing. We'll skip that. Just take the easy and obvious ones. Okay, the easy and obvious ones like this right here. Easy and obvious. Easy and obvious. That need to put in a lower swing. It did. That need to put in a lower swing and kind of doubled up on that one. It did. And then change directions. There was this one right here that I missed that put in a higher swing. This one that I got 11 ticks on that put in a higher swing. And that was where I stopped trading, but that's not where it stopped working. There was another one right there. And in here, the ribbon got crunched up in here a little bit. It did turn to red again on the down close right there. So you had a shot there. Another one there did the same thing right here. The ribbon was all spread out. You could have taken the down close right there. Over here, the ribbon's all spread out. You could have taken the down close right there. Over here, it's all spread out. Down close right there. Over here, same thing. It's all spread out. You could have taken the down close there. Then you get right down into the weekly trading zone. Okay, and that was it for the ES. So there was a ton of opportunity today on the ES. Just a ton of opportunity. And over here now on the NQ. Over here now on the NQ. Okay, go back to the beginning. This was our first trade on the NQ. This is where we got the goal for the day. Went short there. We got 48 ticks on that one. Next trade we took was right in here. Got another 48 ticks on that. Now, that is not to say that those were the only trades that were available, but the NQ was pretty wild. So we took this one. We had to put in a lower swing. We did over here. There was another one right here that would have given another 48 ticks if we'd have gotten it. Another one right here that would have given another 48 ticks if we'd have gotten it. The one that we did get was over here, and we did get another 48 ticks on that one. I put in a lower swing. You could have done another one right there. That would not have gotten you 48. Well, it might have. The pullback had to be 36 tick stop on this, so it might have given you level 48 ticks from here, but I would have probably gotten a break even right through there. In here, there was a chance right there for 48. This one we had to break even on. And at this point, I think we're at 96. Right, and then the next one that we took, looks like we went a while here before we took another one, or before I actually marked another one. Went here, got us up to 154. Then we had a smaller trade from 154. We went to 162, and then we had a break even. I think this last one here was a 48 tick. Went from 162 up to 210 on that one. There was a smaller trade in here somewhere where we got went from 154 to 162. So whatever that is, I think it's 8 ticks. We got a smaller trade in here. I think it might have been this one right here. But you can see again and again, if you can see the ribbon and you come out of the oversold, you see all 4 lines in the ribbon, come out of the oversold. It's good. This one right here didn't work out. This one would have stopped you out. That would have stopped you out. You had to wait for a higher swing to get another one. You couldn't have done anything through there. Then this one here, I got 48 ticks on. Then we get into the break. So in the break, look for the ribbon to be spread, then look down at the bottom. There's one right there that put in a lower swing all the way over to here. Another one right here, put in a lower swing. So right there is 96 ticks. Now remember, you don't have to trade all day. You're not in here to get 200, 300, 400 ticks. You're in here to get the goal for the day. Any one of these trades that worked out is the goal for the day. Okay? And you know, the 24-20 blueprint, the whole reason we went through all this was just to prove to you that if you start out with one contract and you slowly work your way up, that it turns into real significant money in a reasonable amount of time. Now, it took us a year and a half, but still a year and a half to make a whole bunch of money and to just be set. You know, from this point, it's just gotten easier and easier, and it's easier to take the trades with confidence over and over and over again. While I've been talking, there was a trade here. Nothing here yet, but there was this one trade here on the Russell right here. Now that's pretty obvious, right? The ribbon's all spread out. Came out of the overbought thing. That's it right there. Pretty easy and obvious trade. And that was that. That was it this morning. Now what time is it? It's 3:13. Wow. All right. So for anybody that's watching in the YouTube, if you haven't taken the free trial, you really got to take the free trial. Now, let me open up the YouTube. I haven't been looking for questions over there, but you really got to take the free trial with the YouTube guys. Let me look that up. YouTube.com. And there it is. That was a weird picture that came up when I did that. Okay, yeah, there's no questions over there. Okay. Okay, maybe I just had an echo. All right, so if you're watching on YouTube and you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. No credit card required for the trial. Go to the registration page. That's going to bring you here. All you ask for is your name, email, phone number, 5 multiple choice questions. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. TradingView is what you really want to get. If you don't have TradingView, you should really get TradingView. Okay, get the free version. That'll work. Get the free version. You're going to have to get real-time data for it. That costs $7 a month, but get the free version. That'll work. And we can get our indicators indicating for you on the free version of TradingView. Okay. All right. So let's get back into the trading then. Over here on the NQ right now, four lines in the ribbon are showing. Over here on the Russell, the ribbon is showing all 4 lines. We did have a trade here I didn't take, but there's one setting up over here on the NQ that I will take if it sets all the way up. Now, this needs to get up into the overbought, so we need an up close on this bar. Okay, and up close on that bar. The ribbon is trading really thin again, but I'm only trading 9 contracts right now. I did get slippage this morning when I was trading 9 contracts, but it wasn't as bad. Wasn't near as bad as trading with 20. I even got slippage on the ES this morning. Trading with 9 contracts. Okay, so this is kind of what we wanted to see over here. It's got to close up one more time. One more time. Okay, see this next down close it's saying on the ES. Get ready for it. And the NQ's got to close up one more time. Just one more time. There it is. Now we're in the overbought. Now we need 8 points from the top of the bar. 42.25 down to 34.25. Here, I'll bring it over and show it to you. As long as the top stays where it is, then the bottom is in the right place. Okay. If the top stays there at 42.25, and that's what it is. Nope, it just changed to 42.75. 42.75. So this needs to change to 75. You see, I'm watching it right here, right there. What I want to do, I'm going to change this and move that guy over. I don't know which one it is. It's this one. Let's move it over to the right so I can see all that stuff up here. Okay, so the top is still 42.75, so this is still in the right place right here. Right, 8 points from the top of the bar is where you want to be. So that is 8 points from the top of the bar. Okay. If we get a down close, it's going to trigger us in the trade, and it'll pop us out of the overbought. All 4 lines in ribbon are visible. There it is. It did exactly what we wanted to do. It only slipped us 1 tick, which is not too bad. Okay, this needs to go right there. Now 15 ticks in profit. So it's got to get down to 30.75 roughly. 31. 15 ticks in profit and the stock goes to break even. Okay. We have a 36 tick stop on this. Right. We have a 9 by 12 point bracket on the NQ trades. And the stop goes to break even after we get 15 ticks in profit. I should just make that 16. It'd be 4 points after it goes 4 points into profit. I guess I can do that. Pretty simple thing. While we're waiting for this, the ES had a trade going right into the weekly trading zone. So the ES isn't going to give us anything here from the zone. Well, I mean, it's working out okay, but it's not a trade that I would do right into the zone like that. Over here, we did put in a lower swing on the Russell, so that needs to pull back. You get an up close on this bar and maybe the next bar on the Russell. Okay, the YM needs to close down a couple of bars. There it is on that. We're going to go to break even on the NQ, and I think it just took me out of break even. I don't know if I clicked the wrong place. I think I did. I might have accidentally clicked and got myself right out of that. Let me come and see. Well, the average I sold at 78.8. Actually, it didn't. I sold at 78. Oh, I'm sorry. I'm looking at the wrong thing. That doesn't make any sense. I was wondering what the heck. Okay. So on the NQ. Yes, it did get me out of break even. Sorry. I was looking at a Russell number and I was saying that doesn't make any sense at all. It did get me out of break even. Okay. And well, it needed to put in a lower swing, so it didn't. Over here on the YM, we needed to spread out the ribbon. We didn't do that. Over here on the ES, yeah, can't do anything with that. So we just have to wait. What time is it? Wow, it's 13:19 already. Time is just flying on me today. Does anybody have any questions? Any of you guys have any questions about any of the stuff that I'm doing in here? Anybody? All right, well, we'll just wait for more trades to come along here. And Okay, so we're in the overbought here now on the Russell. We need a down close. Let's bring that down lower. Now, the reason we went to larger time frames was so I can do this better for you. All right, so from 63, we want to be 20 ticks below that. I'd be selling right there at 61. Okay, that's what we're looking for here on the Russell right now. Okay, that is why we went to larger time frames. So moving forward, now that the 2420 blueprint is complete, and we can take our time, easier setups, larger time frames. I know the stops are bigger, but if the stop being bigger, the dollar value of the stop being bigger is an issue for you, just go to the micros. Okay, you can trade 5 micros. Works out to be about the same commission-wise. Trade 5 micros, and your stop will be half the size dollar-wise. Okay. And that's going to cancel it right there. We just got blue in there. Did you see how easy that was? That whole process. See how simple that was. For those of you guys who are just on the mentoring, who don't have the context PP, I changed the context over the weekend too. So the default context, you just throw the default context on. It looks like that. Okay. This is what it looks like. This is what it looks like with no context. And if you just throw the context on, that's what it looks like with just the context. Okay. We'll put the PP on because it gives us the target table too. All right. Now, waiting. The NQ is about to set up again for us here. Right, it's about to set up again for us. It's got a low rate here of 62.75, so 70.75 is what you'd be looking at, I think. Not 25, sorry. 25. The low on that is now 63, so 63 up to 71. Is that right? The low is 63 plus 8. Low is still 63. So 8 points above 63 is going to put us at 71. Right? That's what we're looking for on the NQ. You see how easy that is? You can put the order on ahead of time with me. Low of 63. And then looking for the high there at 71. Wow, we gave me a little bit of slippage. 3 ticks of slip on that one. That should be a 0.75. Okay, so everything is right with this. Ribbon is right, everything is right. My stop should be lower than that. 61.75. Minus 9 points it should be, but we're gonna bump it to break even here in a minute anyway. It's got to get up to 75. It's got to get to right there. We'll bump that to break even. It should get at least to right there right now. At least right there. Okay. Now it's already given about 12 ticks in profit. There it is. Oops, I didn't mean to do that. Just one of those. Okay, and we're out of this thing. Yeah, break even. But it did have to give us 4 points in profit before I bumped the stop to break even. So you did have an opportunity to take 4 points in profit on that. It is 13:25, so we have about 4.5 minutes left, guys. We'll wait for the next trade to set up. We were waiting here on the Russell, but you see how the ribbon turned blue? That disqualifies the trades. Here on the ES, it's got to pull back and get this down to the oversold. Once it does that, look for it to come out of the oversold and take a trade. The NQ needed to put in a higher swing from here, but it did not quite get the higher swing done. All right, so we want this all the way back down and bounce off the ribbon. It does actually, sorry, I keep thinking bounce off the ribbon. It doesn't have to hit the ribbon. It needed to put in a higher swing, but it didn't hit a higher swing. Okay, so on the ES right here, sorry, I'm so accustomed to saying all that stuff. On the S right here, we're oversold. We just need an up close. Okay, 77.25 up to 77.00 up to 79. 79. Okay. And there it is. Got one tick of slip on that. Stop this 10 ticks away. We should get right up through all this stuff right here. Should be no issue getting this stop to break even. Okay. Just get ready to drop it there. We'll get 4 ticks in profit. Look at the totals down at the bottom. You have just about 1,000 on one side and 600 on the other. It's gonna go up. It would really, really surprise me if it didn't go up right here. I'll change directions. I got my finger on the mouse, ready to drop my stop at break even. I'll take it off the mouse. I'll move it up when it's time. The Russell, we don't have a trade because we have blue, so we don't have anything there. The YM, we're starting to get together here on the YM with the trade, but not quite there. The NQ, the NQ, we would have taken the up close here on the NQ if we had put in a higher swing from this last one. It does have to put in a higher swing. You do have to continue the trend. That stuff is not changing. All right. All those things that we taught you about price action that we've been talking about for all these years, about price action and all that, that stuff is not going to change. That is always going to stay the same no matter what indicator you're looking at. That's always going to be the same. Price is always doing the same thing. It's going up and down, up and down, up and down until it's going down and up and down, up and down and up. And it goes sideways. There are 3 possible things price can do: go up, down, or sideways. All right, well, this is dragging out right here. This is starting to drag out right here. This is dragging out here. And the YM needs to pull back and then start pushing up. I don't know if the YM is going to come together exactly right because the position of this down here in your trigger. Okay. This would really surprise me if it pulls back down and tests the BBC and stops me out. It did. That is really surprising. It is going to go up. You are going to see it get up here. It's just stopped us up. It really surprised me. 78.75 up to 79.75. If I didn't have the slippage, we would have been a break even. Okay, so now we're bouncing off the ribbon. It is what it is. Hey, look, this down here says next up close. We are on the YM. The YM looks like it's worked it out. All right, it's got a little 194, so add 20 to that. Oh crap! It's time to wrap it up. This is just so much fun. I just want to sit here and trade all day long. All right, so the NQ didn't put in a higher swing. You don't have a trade there. The ES just stopped us out. I get a feeling it's going to be to the tick. The YM is ready to go. Needs an up close from 195 up to 215 is what you'd be looking at. I believe the low is at 195 on that. Low is at 195. That is correct. So you're looking at 215 over there on the YM, like that. Okay. Nothing on the Russell. The ES stopping us out to the tick is now going to run up and do everything that it should have done. The NQ should run up above this prior swing high right now, but we don't have a trade set up for it. Okay. All right. That is going to be it. We're going to wrap it up here, but let me show you, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. We have simplified things so much now, easier than it's ever been. So if you haven't taken a trial with us, take the trial. Okay. If you are already a partner and you're mentoring, to get access to this full time, you need to upgrade to Passport. If you are a Passport, then you can have access to that full time. If you're mentoring, you can access it. You can watch it in the room in the morning and here in the afternoon. And that's it. with that, guys, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne didn't end up being trained yet, but cancel it. Okay, Dwayne, if you are ready. Okay. Doesn't seem like Dwayne's ready right now, so we might be able to get this trade after all here on the YM. I'm just going to load here of 83. So you'll be looking at 203. Oh, no, never mind. Everything just turned to red. No trade there. Cancel. Well, we're on the NQ. Nothing there. On the ES, nothing here. On the Russell, nothing there. And on the YM, nothing there. Now, the Russell's pretty close to a trade. Actually, it's not. It needs to move down and then pull back up and keep the ribbon spread. I don't know. The NQ looks like it's the closest one. Right, the ribbon's starting to spread out over there. Starting to spread. There it is. Now the ribbon is spread. So if the NQ pulls back right here, that ES, I'm surprised the ES did not put that in. You got to remember all those numbers. The ES is going to get back up there. I should have marked the numbers while we're moving up. I was so confident that was going to go. Anyway. Right, on the NQ, we need that to pull back up and test the ribbon here. Nothing there, nothing there. The ES, the way it's working out with the weekly trading zone right here on the ES, I don't think we're going to get anything out of that. This doesn't have to test the ribbon. I'm sorry I said those words. It does not have to test the ribbon. It's got to get up into the overbought like that. That's all it's got to do. All right, so now on the NQ. Now on the NQ, we can look for the down close. 8 points below the top. The top is at 44.75, so it would be 36.75. 36.75 is what you're looking at. The high of that is 45, so it's 45 down to 37. Look at the high of this is right here. 8 points below the high of the bar. Okay, and there it is. We're in the trade. And now if it gets down to 32.75 or 33 right here, we'll bump that stop to break even. Okay. 32.75 or 33 right down here. Right. Should have a 36 tick stop. Hopefully it's not going to matter, but the stop should be 36 ticks right there. Okay. And let's see, how's everything else doing here? The ES is in that weekly trading zone. The Russell needs to keep going down, spread out the ribbon. The YM needs to turn everything down. Needs to go down quite a bit to spread out the ribbon. This is giving a pretty good pullback right here. Our stop is still a little ways above 45.75 is our stop.
Hey, Michael, I'm sorry. I got on a phone call and I had no idea it was going to take that long.
That's okay. That's okay. I was just saying how much I enjoy just trading like this.
Well, I'm in no rush, so if you're in the middle of something, just keep doing it.
Let's just finish out this trade, and we'll see how it goes. You know, normally I would have an appointment scheduled for after this, but I don't right now, so that's okay. It's all good. It's all good. There it goes. We need it to get down to 33. 33 right there. There it is. Stop to break even. Ding. Stop at break even. So that's the position you want to be in. No risk on the trade. Okay, it was a deep pullback on that one, but we ended up with a break even. So to get it to 30, it had to go 16 ticks in, 15 ticks into profit. It went 16, but it had to go 15 ticks into profit. It actually went about 20 to get the stop to break even. So it actually went just about the goal for the day to get the stop to break even. Anyway, that's it. Let me show you guys one more time. If you have not taken the free trial with us, go here to mytradingiq.com, click on this purple button right here. There is no credit card required for the trial. The trade rules page is changed. The entry rules, just 2 lines now. Just 2 lines, and it's all encompassing. That's everything you need to know right there in 2 lines. Down here at the bottom, if you have the free version of TradingView, if you don't have any version, go get the free version. Okay, get the free version, give us your login ID, and we can still set you up. All right, with the free version of TradingView, you're gonna have to get real-time data if you want to actually trade with it. But if you just want to look at it, you can go and get the free version and give us whatever login ID they issue you or you create for yourself. You know, mine is CFRN. It says I'm logged in to CFRN. The real-time data is only $7 a month. But if you just want to go and look at stuff, you know, look at stuff after the fact historically, then you can get the delayed data is going to look the same after the fact. Just go out to tradingview.com to get that free version. The essential, you click on this right here. If you click on that, it's going to bring up this, right? These are the 2 things that you need. You need the context or the context PP, and you need the TV trades range trigger. That's all you need for the charts anymore. Okay, and I set the context up so that this is it by default. You know, if you just put the context on like this, go invite only, hit context. There it is. Okay, that's all you need to do. So with that, I will pass it back out to fabulous Trading Star Zone in Studio 8 overlooking South Mountain, America's largest city park. If you are ready.
Yeah. Okay, recap of the morning session.
I don't think I wrote it down over there. Today it took 6 minutes and 2 trades to get to $2,160 contracts.
Great job.
Thank you.
Making good money in a down market.
Yeah.
It's red.
Doesn't matter.
All around the globe. Asian markets,
really?
European markets, US markets, everything red. Yep.
You know, I didn't look and see what the news event was today. I know we had a high impact news event today, and let me go see. Today it says 10 o'clock. ISM manufacturing was lower than anticipated, so that was bad news. Tomorrow, the rest of the week we have high impact news. Bonds took a big hit this morning.
Today was the busiest day in the bond market in history.
I was just saying the bonds took a big hit today too.
Busiest in history according to Bloomberg. Take a look at the daily chart of the ES. Got red and falling overhead. And last night, I'll show you.
Yeah, show me. It'll be easier than me trying to bring it up over here.
Well, I've got did I go? And I posted this last night. I already showed it to the other guys, but you see today's chart, right?
Yes, I'm looking at today's chart. Yep.
Yeah. So last night at 11 p.m., this is what it looked like. We were sitting right on top of the 50% fib extension, the one that we tried to break through all these days. And then Monday, the holiday, we actually managed to close just above it. So at 11 o'clock last night, it looked like that. And now it looks like that.
Well, it's at the BBC now.
It's at the BBC, and just below the BBC is the 24% fib retracement.
And if you look further left, it's the MA1 BBC cross right there too.
Bullish cross.
Around July 20th. Look left on your chart.
Wait, don't matter over here.
Yeah, right over there. The MA1 BBC cross right there.
Yep.
25th, it looks like.
Yep, yeah, that was good resistance, and
where it's at right now.
Yeah, we'll see if it turns into good support. So
BBC and that cross.
We're sitting on top of the 24% fib extension.
Yeah, you got 3 things holding it right there.
The 24% fib extension, The 24% fib retracement is just below it. And then we're sitting on the BBC. And it's been sitting like that pretty much since the Wall Street Open. It had bounced a little bit, but now it's just come back down to sit on top of it. So anyway,
yeah, the thing I'm thinking right now, it's early in the week and we're pretty close to the lowest weekly trading zone.
Yep.
I mean, I know it's only a 4-day week, but still, we're pretty close to the lowest weekly trading zone, and it's early in the week.
Well, what are we at? 55.73.
Yeah.
We got a zone at 70, 71, and then there's another zone down below that.
Oh, there is this one down below that too.
54.59/54.50. Or 54.59/54.60.
Interesting.
So anyway, I just thought I would show you that. I know you got things to do.
Good stuff.
All right, guys, we already looked at the ES, but for those of you that weren't here, we have the long target, put in a little doji, and then that's when things pretty much, here's the London Open, and the market didn't like what it found, and it began a cascading effect, and here we are, consolidating now for 1, 2, 3.5 hours at the trading zone from last week, which was the next to the, this was the next to the lowest weekly zone last week. The lowest zone last week was down here at 54.71. Tomorrow, because the new zones are out as of this morning at 6:15 a.m. Eastern, then on the broadcast tomorrow, you'll see this week's weekly trading zones. Okay? All the alerts issued last night are based on last week's zones. Normally that happens on a Monday, but because of Monday holiday, it happened on Tuesday. So on the Dow, here we are. And again, the CTAs didn't come out till 8:20. Okay, so we never came close to the long target. We consolidated at the weekly zone, and then we dropped to the short target. We dropped through it, and then we pulled back up to test it, but we had that perfect stack right here, price, step line, red and falling, BBC. So we came all the way down to the zone, consolidated for hours. Here's the 9:30 open on Wall Street. Look at this candle. It's got a high of 41,454. And it's got a low of 41,393. That is one big candle, and it was followed up by possibly even a bigger candle. High of this candle's 396, and the low's 139. But again, now these zones were published 8 days ago, last Monday morning. Tomorrow, the new zones will be on the chart because any alerts that go out today are based on this week's zones. And where did that go? And as of when Valerie did the recap this morning at 6 a.m. Eastern, this is where we sit so far. 13 alerts issued. Still waiting on 8 actionable alerts, of which 1 or 13% would have been stopped out based on market structure. Simple process we teach all of our passport holders. So 8 days later, here's the zone doing its job. When price drops to a zone, we expect support. And when price rallies up to a zone, we expect resistance until proven otherwise. So this was support. Now this is today, Tuesday. This is the short day, Monday. You got Friday, Thursday. We go all the way back. So consolidating at the zone from last week. On the Russell, this is where we opened last night. Never hit the long target. We drop down to the zone. Consolidation, hit the target. Right there. And we got below it. And then there's that WOW. 9:30 Wall Street open. We dropped to the zone. Found support. The next candle took us below. Now we've got the step line. Looks like it wants to hook to the right. Once it crosses red and falling, you should anticipate a retracement back up to the BBC. Now, it hasn't really crossed. It's like it started to cross and it changed its mind, and now it's kind of parallel with red and falling. So this would be a counter trend trade anyway, based on the 30-minute chart. So I would either let price substantially take out this swing low, which is pretty close to the lowest weekly zone. Yeah. Let this price level get taken out, and then you got room to work with down here. On the NQ, here's where we opened, dropped to the short target. Support always sends a market looking for resistance. That's resistance times 2. The BB, when price retraces to the VVC, and price always reverts to the mean. In our case, the mean is green. We call it the BBC. It just stands for bull, bear, cross. That's all. And so, from this resistance, the market's now going to go look for support, which it found at the short target. Support will send it looking for resistance, which it found at the zone. And that's going to send it looking for support, which it found at the zone. A zone-to-zone move from 19,625 to 19,458 at $20 a point. And this was a little window we drew back on Friday, and it didn't fill yesterday, but it filled and then some today. Crude oil. It attempted that long target, got up to 74.29, but it couldn't take out the Monday holiday high. Blue and climbing turns to red and falling. We get a bearish cross. We're consolidating at the zone. We get the bearish cross. Right here, price dropped to the short target, found support. Based off this previous bullish cross, it spiked it a little bit. Bounced up into resistance times 3. Step line, red and falling, BBC. I sent it all the way down to the zone below. Found support. Out of bounds. Now the step line has crossed red and falling. But we're still printing red candles. If we come down and touch red and falling, it's directly below price. That's where you should look for the market to make a turn as price attempts to retrace back to the BBC. And what will happen is red and falling will turn into blue and climbing, just like that. And we were talking about bonds. By the way, we rolled bonds to the Z contract December. Okay. And last Thursday, we rolled silver to the December contract. Gold pretty tame compared to some of the markets. Here's the open. Here's the drop. Short target. Red and falling turned to blue and climbing. We attempted to reach. Yeah, we almost did. I mean, this one candle right here, just as an example, opened at 25.33 and ran up to 36.9. So that's $390 per contract traded in that 130-minute candle. So not too shabby, even though it didn't make it all the way to the target. Then price gets below the BBC. We drop to the short target, support, 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 market structure. Support bounces up to resistance. Resistance sends us down to the zone support. Step line crossed. Off that support, we bounced up to the BBC. Now we expect to pull back to hold because it holds more often than it doesn't. But we've got blue and climbing entering the picture now. Okay? Because we've had some sideways consolidation. This is a scenario where the pullback might not hold, okay? Because there's bullish pressure beneath it, buying pressure. That would still make a nice trade up here from 25, 27, 25, 30. That's $300 per contract traded. When price of gold moves $1, that's worth $100 per contract traded. When crude moves $1, that's worth $1,000 per contract traded. And as I mentioned earlier, silver moves $1, that's worth $5,000 contract traded. So we opened last night around 28.93. $27.93. That would be $5,000. That would be a $5,000 drop. We didn't quite get there though. We only dropped to 28.06. And we opened at 28.92. 28.92. 28.06. Pretty close to $1. Pretty close. And the euro, here's the open. Red and falling takes us below the BBC, right down to the target. Previous bullish cross. When you have a bullish cross that leads to an extended move, first time price revisits that area will almost always be good support. See it? It's right there. Watch for those. Those can make your life simpler. Support sends us to resistance. Resistance sends us looking for support. But you got to go look way back to find that support. Support sends us to the BBC, through the BBC, just shy of the high put in yesterday in the abbreviated session. Resistance, and now has the market looking for more support. So again, you just got to scroll way left and use market structure to let you know where the market is most likely to find support and be good for a bounce. See, blue and climbing has rolled over and turned to red and falling. So some downside action still to come for the euro. And on the daily, it looks like we're pushing our way through that daily BBC. Just below that is the 24%. That's the shallowest possible fib retracement, the 24. Okay. There's a 38. There's the 50. And there's the 62. Amazing how many days price tried to break through that 50% fib extension. 1, 2, 3, 4, 5, 6, 7. Actually closed above it just barely on Friday. Then there's a Monday, and then here's today, Tuesday. And we are now moving below the daily BBC. If we close below the daily BBC, that's a big deal. And right here where you have the bullish cross, remember, bullish cross that leads to an extended move, first time price revisits that area, almost always good support. Now, it's also the lowest fib extension, which was created from this low to this high to this low. And on this drop, we were almost, I kept putting it off day after day. Oh, I'm going to go to reverse fibs. In an uptrend, you draw from the low to the high. Downtrend, you draw from the high to the low. I kept putting it off, and then all of this happened. Now, it took most of the year for price to make this climb, and then it almost did the same thing in just a couple weeks. It takes financial commitment for price to rise, for price to fall. All that's required is for institutional buyers to hit pause on the buy side, and price will just drop. And when institutions that specialize in short selling realize that that's what the buyers have done, and they come out of the woodwork and they'll do their best to drive this thing as low as they can drive it. I mean, at the rate they're going, we could potentially see this bullish cross today. That would, I don't know, that might be pushing the envelope, but maybe tonight, maybe tomorrow. Maybe we spike it and going into the close, we get a bounce and we actually close above it. Remember, it's a daily chart. You don't have to stare at it all day, but if you'll learn to use it, you got to learn to work in multiple time frames, think in multiple time frames, okay? When you start your session, at least give yourself the benefit of knowing what the deep pockets are up to. Are they buying? Are they selling? There were days last week where we had a doji for a great part of the session, and then as we moved into the close, it became quite evident. Now, in order to create a doji, that means price had to move up and it had to move down, and now that price is back where it opened. Okay, so we had several dojis. It might have been on Thursday. Then, yeah, we were straddled the 38, I think it was. That would have been Friday. It's one of these days. But by the time we close, and that's what's important, is where we close. So whether you're looking at a daily chart or a 30-minute chart, it's important where it closes, okay? That's quite a drop. Now this 24, fib retracement. Every institutional trader in the world knows it's there. And they may very well be hitting pause on the buy side because they want to let price drop to there. Why would they do that? Well, because the cheaper price is better, right? I mean, go to the store when they're having us and they got something you want that's on sale. When you see it go on sale, that's when you go buy it. And so that's how institutional traders think. Okay, they can buy it at a cheaper price. That's a good thing. And as you can see, we had a low here on August 29th of 55.61 and a quarter. Today's lows 55.61.75. So we're what, 2 ticks off this low? All right, 61 and a quarter. 61.75, yeah, 2 ticks difference. Okay. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI. You can always email us, support@cfrn.net. When you become a passport holder, you'll have access to the live training room, 2 hours every trading day. 9 out of 10 new traders fail because they don't have someone to teach them how to trade. We spend 2 hours every morning doing exactly that, teaching you how to trade, answering every one of your questions. And that's really what you have to be prepared to do when you become a passport holder. You're not going to start trading live right away. You're going to start out trading in your demo account until you learn the strategy, learn how to read the indicators, learn how to read the chart. Okay, the 2420 blueprint is going to encourage you. We can't make you do anything. It's your trading business. You'll do what you want. But you're going to be encouraged to put together 10 consecutive days in a row in SIM where you reach your goal in 10 trades or less before you actually go live. So once you accomplish that, the blueprint will give you the green light to go live with one contract. Now that you're trading real money, the goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is first contract's funded with your startup capital, but the second contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. You only add one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow that, it will make it far more difficult to blow up another account. In fact, you'll have to break some rules along the way. So a lot of it comes down to once you understand the strategy, once you know how to read the chart and understand what the indicators are telling you, then the ball is in your court. Do you have the self-discipline, the self-control, the patience to wait for the proper trade setup as you're taught, and then execute exactly the way you're taught? And then once you're in the trade, manage the trade the way you're taught. 2 hours every trading day. Along with the group training every day, you get private one-on-one mentoring. The strategy that you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you get the Logic 247 alerts, the concierge trade alerts. You get the weekly trading zones every Monday morning when they're published, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. We've published the zones for our members every week since December 14th of 2009. So we're closing in on a 15-year holiday, or anniversary, or whatever you want to call it. So you'll get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and you'll be able to attend the members only workshop every Thursday night, 8 p.m. Eastern. MyTradingIQ.com. Again, if you got questions, call us, shoot us an email. Be happy to help you out. And make sure when you get in the live training room, whether you're on the trial or you've just become a member, ask lots of questions. Nobody sees what you type except me, Mike, or Valerie. And we're not here to judge you. We're here to try to help you. So I know sometimes people, they're afraid they're going to interrupt the flow of everything with their questions. No. The purpose of the room is your questions. So you can sit and watch forever and not learn how to trade. Or you can get started pushing buttons in your demo account and asking every question that pops into your head. And you can learn how to trade. Trading's not easy, but it can be simple. Okay, good word for the day. Friday, we talked about when God sends you an angel, part 2. Today, part 3. The angel of the Lord encamps around those who fear him and rescues them. Psalm 34:7. What are some other situations when God might send an angel to help you? Well, top of the list, to get you out of trouble. Lot was living in Sodom, a city about to be destroyed because of its extreme sin. That's when God sent angels to rescue him and his family from impending doom. Lot listened, obeyed, and survived. But sadly, his wife didn't, and she perished. Genesis 19. Number 2, we're talking about other situations when God might send an angel to help you. Number 1's get you out of trouble. Number 2, to change your life's direction. Exodus 3:1. Now Moses was tending the flock of Jethro. There the angel of the Lord appeared to him in flames of fire from within a bush. Moses thought his life was over. He grew up in a palace and ended up in a pasture. But every experience, good and bad, had equipped him to lead the greatest migration of people in history. Number 3, when you're facing your biggest challenge, in order to enter the promised land, Israel first had to conquer its biggest city, Jericho. And Joshua did not have a clue how to do it. That's when God sent an angel with a plan that would literally bring down the walls. I'm sure you know the story. If you don't, it's in Joshua 5:14. Number 4, when you have given it your best and want to give up. After his spectacular victory over the prophets of Baal on Mount Carmel, Jezebel put out a death threat on the prophet Elijah. How did it affect him? He told God he'd had enough and wanted to die. But we read in 1 Kings 19:4, then he lay down and fell asleep. There was an angel touching him and said to him, arise, eat. Even today, God still sends angels in disguise to help us. You never know who you're talking to. Well, when you meet a stranger. In fact, we shared that scripture, I think it was Friday. Many have entertained angels without knowing it. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, There is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.